Welcome to simpleroptions.com. My name is Don Kaufman. Here we are, September 23rd, 2015. If you're watching this, today's market conditions, a little bit of a pause in the markets. Again, some major holidays. Tomorrow, action will be back. So, put your seatbelt back on, put the helmet back on, because we're going back in tomorrow. Two things I'm going to cover tonight. Two things. Number one, inside of the SPX, what are we looking at in the short duration for volatility? Okay. And in the SPX, the weeklies, interestingly enough, are not displaying a huge amount of risk. They're actually displaying about a $27 expected move over the next 2 days. The expected move, once again, that's about a 68% occurrence. It doesn't mean that we can't move $50. It means by Friday at expiration time, okay, because every Friday is expiration. Friday expiration time, you can expect us within about a 25-point range. You're like, that's not very much fun, because what does it do? It really takes us kind of where we touched down to this evening. We touched down to right down to about the 1910 level, right? So the S&Ps, it takes us, the low 1900s. But on the flip side here, if we rally almost, $27, oh no, it takes us all the way back up to what? We're still stuck in this relatively tight yet wild trading range. But tonight is when I'm going to tell you, I think we're about to crack it. And I think we're actually going to crack the trading range to the downside. Okay? And it's not often I take like a hardcore stance in a directional position, but there's a caveat there. The caveat is if we explode and have a day or two of explosive upside movement, watch your head to the upside ultimately. Okay, I think we're going down. Markets appear to be diverging to the downside. What I think we have to be careful of, though, is a rip-roaring rally followed by, what we call like the whack-a-mole trade over there, rip-roaring rally followed by a severe down move in markets. Again, I'm kind of going out on a limb saying it because implied volatility, it isn't displaying it. It just isn't displaying it. Like implied volatility isn't screaming to me risk. But the volatility futures are still in contango. They're inverted over there. Again, volatility futures are still inverted. Oil under lots of pressure. There are signs everywhere. You've heard news about China overnight, and the market shrugged it off today because the market's not closed today. All right, but lots of people observing major holiday today. Again, tomorrow, everybody's back to the street. The other standout to me, all right, happens to be Costco. I'm actually looking at Costco, thinking coming right back up to a big time resistance level. However, we do have earnings coming out. There is the possibility of a very short duration, again, a very short duration trade inside of Costco. If liquidity is your concern over there, well, you should be concerned. Okay. The options themselves, again, it's going to sustain an earnings announcement inside of a week over here. I don't think that we look for the trade necessarily through the earnings announcement, okay? But there is a short-term trade here to the downside inside of Costco. Again, I believe the trade is difficult to take inside of the 9-day options because those options are going to see the earnings. I think you can actually get on and get short, okay, Costco, get out before the earnings announcement, meaning this one looks a little bit like, well, they're running it up before the earnings announcement. Okay, you had a nice 2% move to the upside. It's a big move inside of Costco in one day. So I'm looking for a very short-term, short position inside of Costco over the next couple of days. In that, again, the bigger move is all about the index products and looking, again, for markets to have that rip-your-face-off rally before actually their descent kind of continues. One other note over here, I'm actually going to do you in a class, and I'm doing it next week, simpleroptions.com/ratio. One of the most highly requested classes happens to be for me personally to be doing a class about butterflies. But let me tell you something. Butterflies, it's all been done before. So I wanted to go out on a limb here, and I wanted to teach something that nobody does in the industry, and that is to actually teach how to build ratioed butterflies. And it says Beginner's Guide to Ratio Butterflies. Make no two ways about it. This class for 2 hours is going to be rather extreme. We're going to look at trades where you can risk a buck to be able to make two with a 70% chance, okay, of really not losing anything. How volatility skew can really benefit you. And I mean, generally, like, what's a ratio butterfly? Like, what the heck is a ratio butterfly over there? And more importantly, how to get in, how to get out of them. So it's a very peculiar little trade. This is not a trade. This is not a trade that's used as, like, sideshow Bob or anything like that. Like, ratio butterflies can be a big portion of your trading activity. And to be quite frank, I haven't done a lot of them while here at Simpler Options because not too many people really understand them. Ratio butterflies, they can look quite convoluted on the surface, but I'm going to show you how to break them down and ultimately how to dig into them. But, you buy like an unbalanced butterfly, you're like, oh, I'm so unbalanced. People have never known what those things were on Thinkorswim. A 1-3-2 ratioed butterfly, how to take advantage of skew, okay? It's all going to be covered in this particular class. It is next Wednesday. Again, next Wednesday. That happens to be none other than September 30th from 8 to 10 Eastern Standard Time. Again, simpleroptions.com/ratio. My name is Don Kaufman. Thanks a lot for joining us this evening. Be back on later in the week. Bye-bye.